Payments lie at the heart of global commerce and the digital economy. Payments are also becoming a vital component of corporate finance and treasury activities, ensuring the smooth and efficient transfer of funds both domestically and across borders. Welcome viewers. I'm Pushpendra Mehta, Executive Writer at CTMfile, a prominent corporate treasury news site and the host of the Open Treasury podcast. In this video, we spotlight 4 payments-related aspects that are expected to be key focus areas for corporate treasury and finance professionals in 2025. First, real-time payments soared in 2024. Here's why 2025 will be even bigger. Real-time payments reached a new milestone in 2024 and is poised for continued dominance in 2025. According to the December 2024 edition of the Real-Time Payments World Map, a real-time payments tracker series reported by Payments in collaboration with the clearinghouse, real-time payments have reached new heights in 2024. In the United States, the clearinghouse's RTP network recently surpassed an average of 1 million payments per day. In October, the network recorded nearly 32 million transactions worth more than $25 billion, marking increases of 6.2% and 9% respectively since September. The RTP network set a single-day record on November 1st with 1.46 million transactions valued at $1.24 billion. The clearinghouse, which runs the US Instant Payments RTP network, has raised the individual transaction limit to $10 million, supporting the growth of high-value transactions in areas such as real estate, supply chain payments, and business-to-business payments. The US Federal Reserve's real-time payment service, FedNow service, is also redefining the nation's real-time payments ecosystem. The Federal Reserve Financial Services reported on November 22, 2024, that in the last quarter, more than 336,000 transactions were settled on the FedNow service, with consumers and businesses sending an average of $190 million through the service per day. This highlights the growing global shift towards real-time payments, a trend that is especially strong in the Asia-Pacific region. Some of the world's largest real-time payments or RTP markets are in Asia-Pacific, including India, China, and Thailand. India is the clear leader in real-time payments, accounting for about 45% of global RTP transactions in 2023, followed by Brazil, Thailand, China, and South Korea, as highlighted in the 2024 Prime Time for Real-Time report published by ACI Worldwide in partnership with Global Data. According to the ACI report, in Europe, the new EU instant payments regulation is expected to drive instant payments volume across the 27 EU member states. Meanwhile, the Middle East has emerged as the fastest growing market for instant payments. In Latin America, countries are progressing with RTP modernization initiatives aiming to emulate Brazil's success in instant payments, observes the ACI report. Over in Africa, Nigeria is at the forefront of the RTP landscape. As the world's largest free trade area, Africa recorded the highest real-time share of electronic payments in 2023, reaching 40% as per the ACI report. EY's report, The Rise of PayTech, 7 Forces Shaping the Future of Payments, outlines 5 key characteristics of RTP that influence the people, processes, and technology at banks and non-banks alike. These include 24/7, 365 days availability, ISO 20022 messaging format, immediate access to deposited funds, irrevocable transactions, and instant notifications. Together, these features position RTP at a strategic advantage, enabling organizations to deliver value-added services such as immediate payments to vendors or employees, while also reducing transaction costs and enhancing cash flow visibility and control over their working capital. With real-time payments offering a wide range of benefits, Corporations, financial institutions, and governments in major economies are playing catch up as the widespread adoption of instant payments is expected to accelerate global RTP growth through 2025 and beyond. For corporations, this advancement is expected to improve the payments experience for treasury teams and foster greater transparency within the B2B payments ecosystem. The second payments area of focus in 2025 is the anticipated rise in companies' investments in embedded payments. Embedded payments constitute the largest subsector within embedded finance, and their market value is estimated to be nearly 60% to 70% of that embedded finance, approximately $4.5 trillion by 2030, states Dato's Insight study, realizing the embedded payments opportunity. Embedded payments are making the B2B leap. The attributes that have made embedded payments appealing to consumers are proving just as impactful in business environments, fueling the integration of B2B transactions into business processes and supply chains, as noted in the 2025 Commerce and Payments Trends Report by Global Payments. By embedding payment services into the existing systems, large enterprises can automate and streamline digital payment processes, reduce costs, shorten payment cycles, create frictionless payment opportunities, and gain real-time visibility into cash flow. These benefits help businesses improve decision-making, unlock new revenue streams, and strengthen supplier relationships. This may explain why embedded payments have become table stakes among enterprise companies, points out the Global Payments Report. However, small and medium-sized businesses, or SMBs, and mid-market companies are recognizing the opportunity and stepping up their investments and capabilities to build embedded payments. The Global Payments Survey report shows that 76% of enterprise-sized businesses have more than 5 years of experience with embedded payments. In comparison, 82% of SMBs and 63% of mid-market companies are more likely to increase or significantly increase their investments in embedded payments in 2025. When it comes to which sectors are adopting embedded payments, the retail industry leads the way. Nearly 3/4 of retail survey respondents in the Global Payments Report say they've been long-term users of embedded payments. At the same time, sectors like automotive, hospitality, and restaurants have expressed the most interest in exploring embedded payments, reflecting its growing appeal across diverse industries. The third payments area of focus in 2025 is the spider web of payments fraud, which is expected to trap even more unsuspecting corporations. Payments fraud is evolving into something far more dangerous. It is now sophisticated, pervasive, intricate, deceptive, expensive, and relentless, a growing menace we call the spider web of payments fraud. Much like spiders weave intricate webs to trap their unsuspecting prey, bad actors leverage the spider web to construct complex networks of deception, targeting unsuspecting or vulnerable companies and their key executives. Their goals? To extort money, access sensitive data, or disrupt security systems. Often these operations occur in the shadows and go unnoticed until the payments fraud has been perpetrated. Given the increasing ingenuity of cybercriminals and their lack of geographical constraints, 2025 is expected to witness a market jump in both existing and emerging forms of payment fraud. Furthermore, the surge in business email compromise and phishing attacks, coupled with a sharp increase in deepfake fraud attempts in 2024, remains a cause for alarm. Findings from the 2025 Identity Fraud Report by the Intrust Cybersecurity Institute reveal that a deepfake incident occurred every 5 minutes in 2024. This suggests that over the next 12 months and beyond, threat actors are expected to intensify their efforts to target corporate coffers and reputations. Real-time payments are another double-edged sword. They offer incredible benefits like faster and more cost-efficient domestic and cross-border transactions. But the immediacy and irreversibility of these payments leave little time to detect criminal activity or spot fraud. As adoption of real-time payments grows, we're likely to see a notable rise in payments fraud in 2025. Adding to the challenge is the rise of artificial intelligence or AI. As AI adoption accelerates across industries, bad actors will increasingly exploit its capabilities to engineer payments fraud throughout 2025. AI-driven fraud is more complex, damaging, and scalable, indicating that payments fraud attacks are likely to become more severe, widespread, and frequent compared to the past. Cybercriminals, equipped with AI tools, will increasingly infiltrate corporations with strategic precision, orchestrating payments fraud scams that are refined, targeted, and relentless, potentially driving global payments fraud losses to $40.62 billion by 2027. To combat this evolving threat, CFOs and corporate treasurers must make payments fraud detection and prevention a top priority and approach securing payments as a vital and ongoing process. AI-powered fraud prevention tools can play a key role in addressing the increased complexity and speed of fraud, helping organizations identify and neutralize threats before they cause financial or reputational damage. Advanced technologies like biometrics and tokenization are also expected to gain traction as organizations in the payments ecosystem experiment with new ways to combat identity theft and fraudulent transactions. Equally important will be for finance leaders, treasurers, and their teams to develop a thorough understanding of the prominent existing and emerging types of payments fraud they might encounter. This knowledge, combined with ongoing and specialized payments fraud training for corporate treasury professionals, will also help in mitigating payments fraud, thereby reducing the impact of such losses in the rapidly changing payments landscape. The fourth payments area of focus this year is payment orchestration and its growing importance. As highlighted in the Global Payments Report, payment orchestration as a mature technology enables organizations to route and process payments among many payment providers, which is critical in promoting financial transparency, integrating multiple financial platforms and banks, and administering payments to reduce loss or fraud. The report also reveals that 76% of businesses have widely used payment orchestration for 5 years or more, and its importance continues to grow. In fact, over a third of survey respondents indicated plans to invest more resources into this technology, further emphasizing its value. Among the major benefits of payment orchestration outlined in the report are advanced fraud detection and prevention capabilities, greater operational efficiency, improved customer experience, and stronger customer loyalty and engagement. As new AI tools emerge, the survey report predicts further improvements in these outcomes. To illustrate the impact of payment orchestration, the Global Payments Report shares an example of a large retail site with thousands of vendors. Currently, when a shopper purchases an item through the retailer's site, they pay the retailer directly, and the retailer in turn pays the vendors. However, with modern payment orchestration technologies, the retailer can now disperse those funds to vendors instantly as payments come in. This makes the entire process more efficient, vendors get paid faster, and friction on the back end is reduced, resulting in a smoother experience for everyone. The report also highlights how orchestration platforms can manage various forms of payment, from real-time payments to ACH, virtual cards, and even paper checks, all through a single interface. This capability is particularly valuable for B2B payments. As organizations continue to navigate the complexities of the global digital payments ecosystem, payment orchestration has become an indispensable tool. With advancements in its functionality and features anticipated in 2025, its significance is poised to increase. For businesses seeking to maintain a competitive edge, payment orchestration will be essential, not just for driving growth, but also for ensuring long-term success. In conclusion, the anticipated rise in embedded payments investment, rapid innovation in payment technologies, and the growing adoption of real-time payments will create significant opportunities for players across the global payments ecosystem in 2025. Nevertheless, these advancements will also expose vulnerabilities that criminals may exploit to commit payments fraud. Fortifying security control frameworks and addressing areas of exposure will be essential to counter the surge in payments fraud. At the same time, deploying AI to detect subtle patterns and complex fraudulent activities will empower corporate treasury as the steward of financial risk management to curb the escalating risks of payments fraud. To this end, regular engagement with CTMfile's articles, interviews, industry roundups, and videos on treasury and payments management, as well as episodes of the Open Treasury podcast, will help corporations and their treasury teams transform payments into a competitive advantage and unlock value that extends beyond payments. Thank you for watching. If you found value in this video, please give it a like, share it with others, and subscribe to our channel. Also be sure to explore articles, interviews, and industry roundups on CTMfile.com, your trusted source for corporate treasury news. Thank you again and have a wonderful week.